It's already recorded, right? Okay. So let's begin our webinar. Good morning, everyone. Thank you for joining us on our webinar on banking on sustainability, how financial institutions can be your partner in sustainable living. Okay, next slide. So this is a very quick reminder for our usual housekeeping reminders. This webinar is being recorded and will be shared and uploaded in our social media channels. And so you can play it back and you can share it with your colleagues and friends. Now for your identification, kindly please replace your name or change it, update it, and your profile as well. Kindly add your company or organization so that we can also identify you better and for the purpose of also addressing you later on during the open forum. Now, if you have questions, you may raise your hand and later on I'm going to call you. And if you do have any comments, I can, of course, I'll call you and then you can share your concerns, questions, and any comments to our speakers. That's it. Thank you. Next slide. So to begin, we actually have here our opening remarks. It will be delivered by a representative or a spokesperson of our dear architect June, who cannot make it this morning, sadly. But his spokesperson is architect German Paolo de Mesa. He is a partner and the director of strategy and innovations at Palafox Associates and Palafox Architecture Group Incorporation, where he provides leadership across design, innovation, and client engagement. So I'll pass the floor on to Jeppo, Architect Jeppo. Thank you.
Hi, good morning, everyone. So to our partners from Business for Sustainable Development, our friends from BPI, distinguished guests, distinguished speakers, everyone joining us online today, good morning, and thank you so much for having us here. So as mentioned, my name is Architect Herman Paulo de Mesa. I'm a partner and director for strategy and innovations at Palafox Associates and Palafox Architecture Group, Inc. I'm here on behalf of architect June Palafox, who sends his warmest greetings. Unfortunately, he could not personally join us this morning, but I'm honored to share a few thoughts on his behalf and also from the perspective of our work, particularly in architecture, planning, real estate, and the built environment. So by way of brief introduction, I'm also an edge green building expert, and together with my colleagues from Palafox, I have been involved in teaching about sustainability in smart cities through our AIM co-branded course, Smart Cities Development and Management. Yeah. So this topic is something very close to our heart and very close to our day-to-day work, not only in practice, but also in education and advocacy. So with that, first, congratulations to the BSD and BPI for organizing this webinar, Banking on Sustainability, How Financial Institutions Can Be Your Partner in Sustainable Living. At first glance, I understand that banking and sustainability might sound like two very different worlds. One sounds like finance, loans, interest rates, investments, risk management. The other sounds like climate change, solar panels, green buildings, electric vehicles, maybe even lifestyle choices. But in reality, they are deeply connected. From our side, as architects, planners, and designers, we see this very clearly. Every building, every community, every city, every infrastructure project starts with a vision. There's drawings, my plans, meron kang concept, but at the end of the day, kahit gaano kagandang design, if there's no financing, kung walang pera, it stays on paper. And as architect Palafox often says, we'd rather see our mistakes on paper rather than built in concrete. A green building remains a rendering, a resilient master plan remains a report, a sustainable community remains a good intention. So when we talk about sustainability, we cannot only talk about design. We also have to talk about capital. We have to talk about what gets funded, what gets incentivized, what becomes easier for people and companies to actually do. Because banks do not just have money, as you might know more than me. In many ways, banks help decide what kind of future gets built. This is especially important for those of us in construction, real estate, architecture, and urban development. The built environment is one of the biggest parts of climate conversation. According to the UNEP's Global Status Report for Building and Construction in 2024 and 2025, buildings account for 32% of global energy demand, 34% of global CO2 emissions in 2023. UNEP also framed buildings and construction as accounting for around 40% of all global CO2 emissions and 50% of material extraction. I believe there's even a number about 40% of all trash is created from construction. So the UNEPS also noted that construction and demolition waste accounts for more than a third, more than a third of all waste generated by society. So when we say sustainable living, it is not just about using a metal straw, eco bags, or switching off the lights, although of course those things matter. Sustainable living is also about the home you live in, the office you work in, the subdivision or condo you buy into, the mall you visit, the car or transport system that you use, the materials that goes into your buildings, the energy that powers those buildings, and more importantly, the financial products that make better choices possible for everyone. So for the Philippines, this is even more urgent. The concept paper for today's webinar highlights that our country continues to face stronger typhoons, flood risks, failing flood control, rising temperatures, increasing energy, and food security concerns. These are not abstract issues. We feel them, businesses feel them, and more importantly, families feel them every day. A flooded road is not just an environmental issue, it's a mobility issue. It's a productivity issue and a business continuity issue when your employees cannot make it to work. A poorly designed house that traps heat is not just an architectural issue, it becomes a health issue and an electricity bill issue. An inefficient building is also not just a design problem. It becomes a long-term operating cost with diminishing value. This is why financial institutions have such an important role, because many people already want to make more sustainable choices, while a lot of families want lower electricity bills. Many homeowners are interested in solar panels. Many young professionals are curious about EV cars. Many developers want to build greener projects. Many businesses want to reduce operating costs and become more resilient. But the question is not, do I care about sustainability? I think that's something that even all of us attending this now uh, um, probably already cares about. It's, kaya ba ng budget? Meron bang pera? Kaya ba ng financing? Will this long-term savings make sense? Is there a bank that understands this kind of investment? That is where sustainable finance becomes powerful. A green home loan can make an energy efficient home more attainable. Solar financing can help a family reduce electricity costs. Sustainable investment products can help ordinary people align their money with the kind of future that they want to support. And importantly, sustainable finance also allows us to think in phases. So, architect Palafox often says that a project can be designed in modular way, where quote unquote, as the money grows, the project can also grow. We try to walk this talk where this is very important because not every client, institution, LGU, developer can afford to implement everything all at once. That does not mean sustainability should be postponed or even outright canceled. A project can be planned with long-term vision, but implemented through multi-year funding or multi-year development. Phase one can be efficient, functional, and resilient, while still being ready for future upgrades. For example, in some of our work, including the buildings that we designed for the UP campus in Los Baños, Cebu, and Mindanao, we have explored and implemented the idea of making buildings and facilities future for ready use. Future solar panels, future floors, future rainwater harvesting, due to the limited budget that they have to work with. But the design can anticipate these things. So instead of saying we cannot afford sustainability yet, the better question can be, how do we design and finance this so that sustainability can grow with us over time? In other words, sustainability becomes easier when the financial system makes it easier. And I think that is one of the most important messages for today. Sustainability should not feel like a luxury or an all or nothing decision. It is something to be it is something that should not only be available to high-end developments or high-end developers. This is where the idea of the triple bottom line, I believe, also becomes very, very useful. People, planet, and profit, the triple bottom line. For a long time, sustainability was sometimes seen as a cost, dagdag gastos lang, something that have been only in there when there's extra budget for it. But more and more, we are seeing that best sustainable decisions are also good long-term business decisions. For people, sustainable finance can help families access healthier homes, lower energy bills, cleaner mobility, and more resilient communities. For the planet, it helps reduce emissions, waste, resource consumption, especially in sectors like buildings, construction, and energy and transport. And for profit, it helps reduce operating costs, manage risk, protect asset value, etc. So for sustainability, this is not something that should be separate for businesses. Done properly, it strengthens businesses. It helps us move from short-term savings to long-term value. If if the financing is right, then sustainability stops becoming just an advocacy. It becomes a practical business model, good for people, good for the planet, and good for long-term profit. At Palafox, we often speak about planning and designing cities, communities that are sustainable, resilient, exclusive, future ready. But we also know that architects and planners cannot do this alone. Not even the government can do it alone. Developers can't do it alone. Consumers definitely also cannot do it alone. We need the help of the financial sector because finance is one of the, if not the strongest signals in the market. The banks support green buildings, more green buildings get built. When banks support renewable energy, then more of these types of projects get funded. When banks support resilient infrastructure, climate adoption becomes more viable. When banks make sustainability affordable, we start to see it as not an added cost, but as a smarter long-term decision. This is why this webinar matters. The objectives today are very practical, and Palafox is very proud to be part of it. To understand, climate change recognizes the role of financial institutions, learn from BPI sustainability initiatives, and explore green financial products that support choices such as EVs, solar panels, energy efficient technologies. These are not just corporate sustainability topics anymore, these are everyday life topics. So, my hope for this morning is simple. For the banks and financial institutions here, I hope this inspires even bolder products and partnerships that make sustainable living more accessible. For businesses, developers, and professionals, I hope this reminds us that sustainability is not just compliance, it is a strategy, it is risk reduction, and more importantly, it's long term value. And for individuals and households, I hope this helps us see that our financial choices do matter. Every loan, investment, purchase, and every project we support sends a signal about the kind of economy and environment we are building together. On behalf of architect June Palafox, Palafox Associates, again, congratulations to BSD and BPI for convening this important discussion. May today's session help us better understand how banking, design, real estate, businesses, and everyday living can work together to build a greener, safer, more resilient, and more inclusive Philippines. Thank you very much, and mabuhay po tayong lahat.
Thank you very much, Architect De Mesa. That's a very thought-provoking message, and I really hope his message right now to our participants, it will stay throughout the end of this webinar because it's really the reality, right, of our current world right now. So thank you very much for your time and for that wonderful message. Moving on our next slide, please. So to give our first session, I'm going to hand it over to our Executive Director, Mr. RV Perez. He will be sharing why sustainable lifestyle matters and more. So, Mr. RV.
Thank you. Good morning, everyone, and thank you for joining us in this webinar. Let me just share my slide. Hey, can you see my... Yeah, hello. Can you see my presentation? Hello.
Yes, sir. We can see it.
Okay.
Oh, good.
Good morning, everyone. Usually when we think about climate action, most of us immediately think about reducing our carbon footprints. So, usually we think about recycling, conserving electricity, eating less meat, because production of meat has higher greenhouse gas emissions, or driving less, or driving an EV car, or taking even fewer flights. So these actions are important and should continue. However, today I want to introduce a concept that expands the conversation beyond personal consumption. So the concept is called climate shadow. Climate shadow asks us to consider not only the emissions we personally generate, but also the influence we have on others, the organizations we work for, the policies we support, and the systems we help shape. By the end of this presentation, I hope you'll begin to see that your greatest climate impact may not come from what you consume, but more importantly, from what you influence. So why live a sustainable life? I think we are all familiar with the sustainability megatrends facing humanity now. Climate change, of course, is the biggest and most important challenge that we are facing right now. And it is mostly driven by global warming due to greenhouse gas emissions caused by man. So in fact, this year we will be experiencing one of the strongest El Nino phenomenon. And some scientists are already calling it a super El Nino. So this means that the Pacific Ocean will be warming up and will be affecting all the weather globally. Also, there are early signs of the collapse of the Atlantic meridional overturning circulation. This is the current that manages the temperature of the Atlantic Ocean. So scientists are closely looking at this. Another mega trend is nature and biodiversity loss. And this is due to overconsumption by the depletion of natural resources. And of course, the excess waste leads to pollution, especially the biggest problem now with regards to microplastic pollution. And lastly, social inequality. And this is due to income disparity, with the rich getting richer, the 1% of the global population owning the bulk of the wealth of the world. This also includes indigenous people rights and gender equality. But we go to the common issue of the carbon footprint. So for the past decades, we've been taught that in our climate communication, it's largely been focused on individual responsibility. So we've been encouraged to calculate our carbon footprints, make lifestyle adjustments to reduce emissions. And these recommendations are the things that we usually hear that I mentioned earlier: drive less or drive an EV car, even fly less, use renewable energy, buy sustainable products, reduce your waste. And these are actions that certainly have value. However, there is a limitation. So when climate action is framed primarily as a matter of personal consumption, it can unintentionally suggest that climate change is mainly the responsibility of individuals. So this can create feelings of guilt and also overwhelm people. So people begin to ask themselves, am I doing enough? What if my footprint is still too large? So the challenge is that climate change is fundamentally a systemic problem involving energy systems, infrastructure, financial markets, public policy, and corporate decision making. This raises an important question. Can individual lifestyle changes alone solve a systemic challenge? The concept of climate shadow was introduced by this climate writer called Emma Patty. In an article, she described it as a dark shape stretching out behind you. Everywhere you go, it goes too, tallying not just your air conditioning use and your gas mileage of your car, but also how you vote, how many children you choose to have, where you work, how you invest your money, how much you talk about climate change, and whether your words amplify urgency, apathy, or denial. She argued that our climate impact extends far beyond our personal emissions. So think about it this way. Every person has a sphere of influence. We influence friends, family members, colleagues, organizations, communities, and even public discourse. So climate shadow attempts to capture that broader influence. It includes the work we do, the organizations we support, the investments we make, the policies we advocate for, and even the conversations we have. So instead of asking only how much carbon do I emit, climate shadow asks how much influence do I have over climate outcomes. So this shifts dramatically, expands how we think about climate shadow. So if we compare, a carbon footprint measures emissions directly associated with our activities, while the climate shadow measures the broader consequences of our choices and influence. So a footprint is largely about consumption, while the shadow includes consumption, but also leadership, advocacy, investments, and social influence. So the footprint asks, what impact am I creating directly? While your climate shadow asks, what impact am I helping create through others and through systems? Of course, both concepts matter. The climate shadow framework does not reject carbon footprint reduction. Instead, it recognizes that influence often creates impacts that are much larger than personal consumption alone. So what are the three dimensions of the climate shadow? It can be understood through three dimensions. Number one, consumption. So how we live and what we buy, which includes our lifestyle and purchasing decisions. Second is choices, meaning the major decisions we make throughout our lives, such as where we work, where we invest, and what roles we pursue. Third is attention, which refers to what we talk about, prioritize, support, and amplify. These dimensions interact with one another. Together, they determine not just our emissions, but our influence on society's response to climate change. So let's discuss the first dimension on consumption. This is the area most people already understand. It includes, let's say, energy use, transportation, food, housing, shopping habits. So reducing consumption-related emissions remains important, but the climate shadow concept does not dismiss these actions. However, it reminds us that reducing our footprint is only one part of our climate impact. For example, switching to renewable electricity may reduce emissions from your household. However, encouraging an entire company to switch to renewable energy may reduce emissions 1,000 times more. So this illustrates the difference between footprint and shadow. If we go to the second dimension of choices, so some choices create effects that last for years or even decades. Consider decisions such as choosing an employer, or pursuing a leadership role, or joining a sustainability team, becoming an investor, serving on a board. These decisions influence many other decisions over time. Imagine a sustainability manager who helps a company establish a net zero strategy. That single career decision could influence millions of tons of emissions over the next decade. In this case, the individual's climate shadow may be much larger than their personal carbon footprint. This reminds us that our professional choices can be among our most important climate actions. So the third dimension of attention. Attention shapes priorities. What we talk about often influences what people care about. Research shows that people are more likely to engage with climate issues when friends, colleagues, or family members discuss them openly. So climate conversations help normalize climate action. Attention can take many forms. Sharing information, you can discuss solutions, or you can support initiatives, or even more importantly, challenge misinformation. So every time we elevate climate issues in our communities or workplaces, we expand our climate shadow. In many ways, attention is a multiplier of influence. So one of the most powerful aspects of the climate shadow is the ripple effect. Human behavior is contagious. People observe and imitate others. For example, studies have shown that solar panel adoption often spreads through neighborhoods because people see their neighbors installing them. The same applies to electric vehicles. We see already the influx of electric vehicles in the roads, sustainable investing, and climate-friendly business practices. So every positive action has the potential to influence additional actions. So when influence spreads, impact grows exponentially. This is why climate shadow emphasizes multiplication rather than individual reduction alone. So why does climate shadow matter? Why is this concept important? Because many people experience climate anxiety, guilt, or frustration. Some feel that no matter what they do, it will never be enough. So climate shadow offers a more empowering perspective. Instead of focusing exclusively on personal perfection, it encourages collective influence. Rather than asking, how can I reduce my emissions? We can also ask, how can I help others reduce emissions? Or how can I influence organizations and systems? This perspective creates opportunities for leadership and collaboration. So climate change is not caused solely by individual consumption. It is deeply connected to larger systems. These systems include energy generation, transportation infrastructure, manufacturing, agriculture, financial systems, public policy, and even consumer behavior. So individual behavior matters, but systemic change determines the scale and speed of emissions reductions. This is why climate solutions require governments, businesses, financial institutions, and civil society to work together. So the climate shadow concept helps us recognize our role within these systems. So how can your climate shadow work in your workplace? So many people understand the influence they have at work. Organizations make decisions every day that affect emissions. So employees can influence, for example, procurement policies, what products you buy, or energy use, or even the amount of business travel and the travel policies, supply chain standards, which supply chain provider to select, or even sustainability reporting. So a single employee advocating for sustainability can trigger significant organizational changes. So for those of us working in sustainability, our professional influence may represent our largest climate contribution. This is especially true for managers, executives, consultants, and even board members. So how does climate shadow work in finance, which is what we will be discussing later? So finance plays a critical role in shaping the future economy. Capital flows determine which projects, technologies, and industries grow. So investors, lenders, and financial institutions influence climate outcomes through lending decisions, investment strategies, shareholder engagement, and climate risk assessments. So redirecting capital toward low carbon solutions can accelerate the transition to a sustainable economy. So this demonstrates how financial influence often produces a larger climate shadow than personal lifestyle changes. So later on, we will be listening to the sustainability initiatives of BPI. And the reason why we selected BPI is because of their groundbreaking initiatives in sustainable finance, becoming one of the first to get into bonds, not only green bonds, but also blue bonds, um, sustainability-linked loans, green equity, and also BPI's groundbreaking initiatives in transition finance, as shown in the transition of the ASEN coal-powered power plant. So we look forward to our discussion later. So also, how can climate shadow influence public policy? So we believe that public policy has perhaps the largest climate multiplier effect. Policies influence entire populations and industries. So an ordinary citizen can contribute through, basic of all is voting, advocacy, public consultation, and more importantly, community engagement. For example, policies that accelerate renewable energy adoption can reduce emissions across an entire country. So a single vote or advocacy effort may influence climate outcomes far beyond an individual's direct emission. So this highlights the importance of civic participation in climate action. So leadership magnifies influence. So every leader casts a shadow. So leaders influence organizational culture, strategic priorities, resource allocation, employee behavior. A CEO, a government official, community leader, or educator can shape decisions affecting thousands of people. The key question for leaders is, what kind of climate shadow am I creating? Is it accelerating solutions or maintaining the status quo? Leadership carries tremendous climate responsibility. So let's look at one simple case study. So let's consider two hypothetical individuals. Person A has a very low personal carbon footprint. They live sustainably but rarely discuss climate issues or rarely influence others. While person B, although has a larger personal carbon footprint because of their frequent travel, however, they lead sustainability programs, influence investment decisions, and advocate for climate policy. So the question is, who has the larger climate impact? Most people initially focus on emissions, but climate shadow encourages us to consider influence as well. So the purpose of this exercise is not to excuse carbon emissions, rather it is to recognize that climate impact is multidimensional. So the answer is not always obvious on who has a larger climate shadow. So the good news is that everyone can expand their positive climate shadow. There are 5 practical approaches as shown here. Number 1 is to talk about climate solutions. Second, influence decisions in your workplace. Third, support policies that accelerate climate action. Number 4, align investments with sustainability goals. And lastly, perhaps mentor and inspire others. So these actions create ripple effects that extend beyond your personal behavior. Always remember that influence often scales impact. So let's have a simple reflection activity. Take a moment to reflect on these questions. Who do you influence? What decisions can you shape? What organizations are you connected to? How do you spend your time, money, and attention? Where do you have the greatest opportunity to create positive climate impact? So climate shadow is highly personal. Each person's opportunities for influence are different. The goal is not comparison, but the goal is awareness and intentional actions. So let's summarize the main messages. First, reducing your carbon footprint remains important. Second, climate impact extends beyond personal consumption. And third, influence matters. Fourth, systemic change requires leadership, advocacy, and collective action. Finally, every person has the ability to expand their positive climate shadow. So the question is not simply how much carbon do I emit, but the question is how much positive change can I create? So as a final thought, every one of us casts a climate shadow, whether we are employees, executives, investors, educators, policymakers, or citizens. Our actions influence others. So the future will not be shaped only by the products we buy or the emissions we reduce. It will also be shaped by conversations we start, the organizations we influence, the policy we support, and the leadership we demonstrate. So I invite you to reflect on this question. What kind of climate shadow do you want to leave behind? As one person said, the larger the positive climate shadow, the greater the influence for climate solutions. So how can you use your role right now, your voice, your expertise, and your influence to create a larger positive climate shadow? So thank you. Thank you very much.
Very, very well said, Sir Orby. Thank you very much. So to our participants, if you are actually feeling very reflective today and this morning, you can share your thoughts in our chat box because later on I can read them for you. And if you also want to be more interactive, you can share it with our participants and of course our speakers. So before we go on to our session 2, we do have a transition discussion. And for that one, we have a very huge question that we have to tackle today. No, it is the role, or what is the role of financial institutions in climate action? So I will encourage you guys that there will be 3 questions that I want you to answer. Kindly take out your phones. And of course, if you're using your PC, then I'm gonna be sending the link in our chat box so that you can join. There we go. So there, if you can see it, then you can just join through the web browser. So please take out your phone and join our Menti poll. Yeah, give me a few more seconds. I'll share my Menti. Okay, there we go. So I hope you can see it. And I'll be seeing how many have joined. I can see 11 active participants. Okay, let's wait for some more. They're just very quick questions that we are, of course, very curious to know, and we will learn from each other as well later on. Okay, 13. Okay. So for the rest, yeah, just catch up. So now we're gonna have our first question. So here we have here, what is the biggest obstacle preventing you from adapting a more sustainable lifestyle? So we have higher upfront costs, limited access to sustainable options, not sure where to start, and the lack of information. I'm seeing a lot of participants answering number 1, which is higher upfront cost, and then followed by limited access to sustainable options. Okay. So it's kind of far between lack of information and not sure where to start. But it's still really higher. The main reason is higher upfront costs. Okay. So yes, it's still ranked as first. So it is a very timely webinar because there's a lot of opportunities on how we can adapt sustainable lifestyle. Okay, next question. So the next question is, would you be more likely to invest in solar panels, an EV, or energy efficient appliances if affordable financing were available? So we have definitely, probably not, and not sure. So of course, our ranked or our top one answer here is definitely, and no one will say no to that as long as it's an affordable financing option, right? So good to know that. All right. Let's move on to our last question. Before today, were you aware that banks can offer financing solutions specifically designed to support sustainable living? So we have yes, I'm very aware, somewhat aware, heard about it, but don't know much, and not aware at all. So for those who answered not aware at all, then this is a good info webinar for you. And for the rest, of course, we will give you more information that probably these are the latest news or latest trends that you should be aware of. All right. So thank you very much for those who answered. This is the last question. Okay. So going back to our program deck. Okay. So can we go back? Go back, Phil. Okay, so we're going to have a quick photo before, of course, some of our speakers might leave our call. So if you're okay with that, we would encourage you to open your cameras and just take a quick photo for the webinar so that while everyone is still here. Okay, yeah. Thank you very much. Okay, so go ahead, Phil. Kindly facilitate.
Okay, everyone, let's try to open our cameras. There's still some I see not open yet. Okay. Let's give them a few moments. Okay, seeing a few more faces. All right, let's take a photo in 5, 4, 3, 2, 1. Okay, let's take one more. Let's give everyone a chance to open their cameras if anyone wants to have their faces shown anymore. Oh, okay. All right, another photo in 3, 2, 1. All right, thank you, everyone.
Okay, thank you. So going back to our poll, I hope some of those questions, of course, also made you realize that that's your current standing in terms of your knowledge in sustainable living, and of course, what are the things that's it's hindering you from taking those steps. Now I'm gonna pass this on to Sir Arvi to enlighten us further before we proceed with our session 2. So Sir Arvi.
Thank you, Ray. Before we proceed to our main speaker, I just wanted to give a brief overview on how financial institutions can contribute to climate action. So let me just share my slide. So, okay. So every major economic activity from power plants to housing, transport, agriculture, and industry depends on financing. This means financial institutions are not just observers of climate change, they're also key actors in either accelerating the problem or enabling the solution. So financial institutions have enormous influence because they determine what gets funded, what grows, and what becomes economically viable. So if you look at the chart here, climate finance can go into a lot of climate-related or sustainability-related initiatives like climate change resilience, conservation of biodiversity, climate change mitigation and adaptation, sustainable transport, renewable energy, sustainable agriculture, and energy efficiency, to name a few. So financial institutions are uniquely positioned to accelerate the transition to a low carbon and climate resilient economy. So why does climate change matter to finance? Climate change can lead to actual physical and transition risks, both of which have a financial impact on a company. So these risks also affect borrowers, investments, insurance claims, and asset values. Aside from physical and transition risks, there's also the reputational risks. Stakeholders increasingly expect responsible lending, transparency, and climate accountability. So the climate change leads to increased financial risks. So financial institutions are catalysts for change. Deposits that you make to banks are funneled through lending and investments, which lead to business activities and economic outcomes. So financial institutions influence what gets built, what expands, what declines, and what innovations scale. So capital allocation is one of the most powerful levers for climate actions. So financial institutions can direct capital towards low carbon transition investments, such as renewable energy, energy efficiency, sustainable infrastructure, electric mobility, and climate smart agriculture, as a few examples. So banks and investors help scale clean technologies by making financing accessible and affordable. And so achieving net zero emissions requires trillions of dollars of investment globally. And this is where the banking institution can help contribute. Through lending and investment decisions, financial institutions can also encourage companies to change their behavior by improving ESG performance, disclosing climate risks, adopt transition plans, and reduce their emissions. So if you look, financial institutions influence their clients and lead to disclosures that specify their targets, their transition plans, and also their emission reductions initiatives. So financial institutions can shape business behavior through expectations and incentives. So finance also supports climate resilience and adaptation. For example, the most controversial flood control infrastructure, water security projects, resilient agriculture and architecture, and disaster recovery financing. The Philippines is one of the most climate vulnerable economies, and climate finance is not only about mitigation, but more importantly, about adaptation. So financial institutions are also increasingly adopting climate disclosures, portfolio emissions measurements, scenario analysis, and sustainable finance frameworks. So these are all some of the reports that banks also require from their clients. For example, banks want to know what is the governance structure, strategy, risk management, and metrics and targets of their clients in relation to climate risks. There are several frameworks that have recently come out, like the IFRS S1 and S2, GRI climate disclosures, and also finance emission measurements, which require clients to submit to banks on what they are doing in terms of climate risks. Recently, a new ISO standard came out, which is the ISO 32212. This is the new global standard designed specifically for net zero transition planning in the financial sector. So this framework provides guidance for banks, insurers, asset managers, and other financial institutions on how to integrate climate objective into governance strategy, risk management, and investment decision. So what gets measured get managed. So banks play a role in encouraging businesses to be more transparent and to provide disclosures of their climate risks and strategies. There's still a lot of challenges and opportunities in sustainable finance, some of which are data quality. There are some limited emissions data, difficulty measuring finance emissions, or in terms of policy, there's a lot of policy and regulatory uncertainty, especially with regards to inconsistent policies and evolving standards, or balancing short-term and long-term priorities. So there's a lot of pressure for profitability for banks and also for the need for long-term resilience. Lastly, there are also greenwashing concerns. That's why there's a need to have credible targets, measurable impacts, and transparent reporting. On the other hand, there are a lot of opportunities like in green bonds and green equity, or sustainable finance products, or transition finance, which I mentioned earlier with the groundbreaking project of Ayala and BPI with regards to their ASEN coal-fired power plant. And also recently, there's a lot of nature-based investments. So climate action is both a risk management necessity and a growth opportunity. So lastly, finance can shape the future. So financial institutions sit at the center of the economy. So by aligning capital with sustainability, they can help accelerate climate action while strengthening resilience, competitiveness, and long-term value creation. So as the quote says, the transition to a sustainable economy will be financed or it will not happen. So financial institutions are not merely funding the future, they're also helping define it. So thank you very much.
Thank you, Sir RV. Okay, so that is why in today's webinar, we will be hearing from one of the prestigious banks in the Philippines to talk about their journey in addressing climate change and advancing sustainability. So our guest speaker led the Bank of the Philippine Islands, or BPI's, efforts in responsible sustainable banking. During BPI's 17-year pioneering sustainability dedicated journey, she helped develop and implement BPI's ESG strategies, aligned with global sustainability standards. She spearheaded the BPI Sustainable Development Finance, or SDF, program, which supports projects in renewable energy, energy efficiency, climate resilience, sustainable water, pollution control, and sustainable agriculture. She also introduced BPI's ESG plus E2 framework, highlighting that true sustainability must deliver economic benefits through revenue growth, cost reduction, and risk mitigation, or E2. Under her leadership, BPI has earned top ESG scores and multiple national and regional recognitions. So a round of virtual applause, please, for Ms. Joanne B. Iala.
Thank you, Ray. Thank you to Mr. De Mesa, no, and of course RV. Your presentations make me regret that there are only 24 of us, no, and in this online meeting. I think there will be a lot of value, no, in doing a repeat for a bigger audience, no. Also happy that there's at least another bank no present no from PNB. Why? Because we intend to detail everything that we do. Usually and ask anyway of our regulators for BPI to share lessons learned, no? So that those banks who are interested to pursue sustainable finance no, will already find it easier no to and more rewarding no to engage no in sustainable lending, among other things, so sustainable finance as a whole. So sharing with you our journey in addressing climate change and advancing sustainability. Now, also commenting on RV's point on climate shadow, I think it's also very usable for the corporate front. No? Of course, it's inspiring for individuals, but carbon shadowing or the carbon footprint, no, of corporates is one thing we're doing. There is a lot to cover. I thought 45 minutes would have been pretty long, no? But there's still a couple of things that we did not cover anymore, and we're going for the core, no, the core initiatives of the bank. So here it goes. No, first, next slide, please. So one of the things, or one of the key success factors, no, for the Ayala Group and for BPI in particular, is the tone set from the top. No, when asked, no, what are the key factors that ensure success, no, in our sustainability initiatives in BPI, among the many factors, and this would be, if not the first, maybe among the first two or three, is the leadership, no, the tone set by the leadership of the group. No, so if you have a chairman who is in fact chosen among the top 10 corporate champions of the sustainable development goals in the world, no, you can imagine the principles he upholds. So when he came home in the 80s, coming from Harvard, he was already saying people, planet, profit in that order. So people come first. So financial inclusion as a priority has always been there, no, for BPI. Even if you hear all these leading roles, no, pioneering roles in green, in truth, no, our social commitment even comes higher. Next slide, please. So just to give you that context, no. So belonging to the Ayala Group, no, and having that kind of leadership, you can see here the roadmap, no, being followed by the larger subsidiaries. You don't see everything here, but the larger subs, no, of Ayala, and you will see the assignment of BPI. No, as far as the SDGs are concerned, we are assigned number 8, decent work and economic growth. Well, clearly because of our scope, no. So we are not like Globe, which focuses on telcos, or Ayala Land, no, which focuses on the real estate sector. Globe, which is a telco that focuses on telco. Globe is a telco, Ayala Land is a real estate company, so they're very specific sectors. In the case of BPI, you can think of the whole economy, except of course for the excluded sectors. Imagine, we lend to everyone, no, from the biggest, no, from the biggest multinationals, no, to the smallest entreps and micro entrepreneurs, no, yan, kasama lahat yan. Okay, next slide, please. So I do this quick, no, because the journey is pretty long. But what I think I should emphasize is this, no. So fortunately, after the 80s, when JASA came and carried the advocacy People, Planet, Profit, with people coming in first, BPI has already been, and the group has already been pursuing a sustainability track. And when IFC of the World Bank Group was looking for a financial institution partner, an FI partner in the Philippines, so BPI became a natural choice. That's why BPI is the first private bank to have introduced sustainable finance, so focusing on energy. So the name was Sustainable Energy Finance. I changed it later to Sustainable Development Finance because I was including climate resilience in it, no. So and then later on it became really cemented as Sustainable Development Finance because Sustainable Development Goals also came along. But you can see here discussions on resilience as well, climate preparedness, which we will detail anyway in a while, no? So next slide, please. So this is 2008 to 2014. The next one shows us 2018 to 2020. So you'd see TCFD there. You'd see the introduction also of Hazard Hunter, which we will also detail, no, and our commitment to zero out coal with a specific date, because it's different, no, if you say no more coal but you don't say when, right? So in the case of BPI, we said zero by this year. Half by this year, zero by 2032. in terms of coal portfolio of the bank. Okay, and then last slide for the journey. Next slide. There. So this is up to 2024. We'll detail a little bit more anyway, for the rest of the sustainability achievements of the bank, including both what we call responsible banking, which include our offerings, banking solutions offered to clients, as well as our own operations. So this journey just tells you how each year we would achieve various milestones, including the first energy transition mechanism, which we call ETFF, the EDGE certified branches, noted, yes, that our earlier speaker, Herman Paulo. I don't know what your nickname is, but we noted that you are an EDGE, auditor as well. So thank you. And we espouse EDGE because it adopts a quantitative approach, to measuring GHG emissions as well as savings, etc. So savings from energy, water, and carbon footprint in material. Okay, so we are also currently, we are the only FI member of the UN Global Compact, which is called Global Compact Philippines, in the country. So without further ado, I'll move on beyond the journey because we will detail them. This is just an overview. Okay, next slide, please. So let's start with our agenda. BPI, other than the main vision and mission statement of the bank, we have a sustainability-focused vision, which states that our goal is to be an inclusive, innovative, and trusted leader in responsible banking. So that means that we incorporate ESG principles in how we conduct business from the time we resource, craft our products and services, serve our customers, and add value to our stakeholders. Then when we allocate resources, all aligned with also the discussions of RV earlier, on the role of a bank, because we know how big BPI is and we know our impact to nation building. So we're very careful with the allocation of our resources. And you'd see again, financial inclusion comes first, people first, and then preservation of the environment, sustainability, and then social good as a whole. So that's how the mindset of BPI is, and this is what defines our sustainability strategy as well. Okay, next slide, please. So let's talk about, I said, two pillars. So we're talking of responsible banking, which defines how we put together and offer our banking solutions, to our clients and partners. And then the next one later is responsible operations. So let's go for responsible banking first. So I later on you will see how we cut green and social, because the just to differentiate and environmental and social portfolios and initiatives of the bank. But let's do a rundown first, of the many firsts, the many pioneering initiatives of the bank. So thematically, so while there are 9, let's look at first sustainability in lending. So when we talk of sustainable lending, the pioneering initiative, which we are always asked by the central bank to share with other banks, is this, because we had Sustainable Development Finance, earlier called Sustainable Energy Finance, as early as 2008. And the key solution here, which I understand now is the only remaining one in the world, because there was one in Mexico for some time, but they have since stopped. And this is free technical consultations, especially for the smaller or not so big green projects. Why or how are we able to do it? The why is we want to ensure success of the project so that at the end of the day, project viability, feasibility results to financial success, which indeed we need for the project to be truly sustainable and for us as a lender to get paid I mean, really, the business case behind it becomes very, very strong. So it's still profitability with purpose, and it is key to sustainability. And you'd hear us talk about that a lot. No, even if there are times that we get attacked, no, for talking about profitability amidst a sustainability program. On the more retail side, we have eco-friendly retail financing solutions called green solutions, no, that fund solar on the roof. Imagine a housing loan with longer tenor, 15, 20 years, or even longer sometimes, and you tuck in solar on the roof. Normally, solar would have had a shorter tenor, no? Kasi ano yan eh, diba? It's like a device, an appliance, but it's tucked into the housing loan. Of course, we are ahead no, when it comes to electric and hybrid vehicle funding. And it helps that we have a partnership with AC Mobility, right? So the bigger story on the corporate side, of course, is the third box, no, which is the first in the world energy transition financing facility. We call it ETFF. ADB calls it uh, energy transition mechanism. It was the only one for a while, but late last year, I understand there were a couple of other institutions who were finally able to follow. And what happened here, this is the shortening of the life of a coal plant. 15 years, from 2055 to 2040, inclusive of just transition. No? Sige. Cautious of time, we will not detail because that is a whole discussion altogether. But that is sustainability in lending for you. No? A couple of examples there. Okay, next slide, please. So you will hear later, by the way, because if those that you heard of are primarily green, you'll hear more on the social side later. So let's talk of investing first. Well, of course, because of our investment banking role, no, again, the ETFF facility, you'd see it here. But you will also see couple of other innovations where BPI Capital, our investment banking arm, was able to help. No, so first sustainability linked bond in the country, that was Ali's 6 billion, and we were able to put it together. Another one is BPI Capital's book runner and coordination role for Maynilad's IPO, because it's the first green equity as well. No? So we're talking here of pioneering, no, Philippine firsts. So that is in investment banking. Okay, next slide, please. The next one is on, this is actual investing. No? Earlier, it was investment banking. Now we're talking of investing, no? And which is available to individuals. And do you know that to make it more affordable, our wealth group lowered entry to 1,000 pesos. No? So minimum investment requirement for we call that UITFs or investment funds. The entry now is only 1,000 pesos. So with that small amount, you can now support projects, no, help in funding projects that are either environmental or social in nature. Because the funds are pulled, you think of the funds pulled together, to be able to, for us, to be able to invest them in the actual projects. And this become more impactful. Because at the end of the day, we're talking of impact, no? We're talking of materiality. Where can 1,000 go? No? But if you pull the funds together, then it becomes more potent, no? Because of the amount of impact it can create as you contribute, no, your share in funding very specific, impactful projects. Okay, next slide, please. So we are also able to raise money from investors in Switzerland, and this is a groundbreaking, record-setting, negative yielding green bond. So it is not just first in the country; it's first in Southeast Asia. Fortunately, well, in the first place, naman, investors in Switzerland are not new to negative yielding bonds. But what is earth-shaking here is that the investee, the offer came from a Philippine bank, a Southeast Asian bank, and a Philippine bank. No? And we all know how exposed we are to many types of risks. So physical risks. And when you say physical, climate and non-climate, yeah, we even have earthquakes. Transition risks, we're also exposed there. And then you're looking at being located along the typhoon belt. So other than the many other issues that we have beyond nature related, no, we have catastrophes caused by humans in this country, and you have an investor agreeing, no, to have a negative yielding green bond. So we're pretty proud of this. This happened in 2019, but it was a first in the region. So we keep on saying, we got this one. Okay, next slide, please. So we also have risk management initiatives. Fortunately, no, our president in 2019 asked, he said, Joanne, how exposed are we? How insured are our properties and our clients' properties? And then that time turned out that Hazard Hunter was already issued or relaunched to the public. We didn't know that it was fresh, but we know of the data being there for years. No, so Project NOAA, Pag-asa data, and FIVOX data being consolidated under one umbrella system called Hazard Hunter. So again, BPI was the first one, no, to have implemented environmental risk assessment, not only for our own assets but also for our clients' assets. We also were the first bank, as mentioned earlier, no, to have publicly declared that we will phase out our coal exposure. And from a risk perspective, no, if you're talking transition risk or having exposure to stranded assets, no, that is actually in its own way a risk mitigation initiative. Okay, next slide, please. So those were the 9. No, actually, have a couple of other ones, including those involving operations, which will be detailed in a while. Okay, so turning over the floor first to Georgie. Okay, Georgie, take it away. Thank you.
Yeah.
Georgie, you're muted, or maybe your voice is unstable.
Checking. Am I audible?
Oh, yes, much better
Yes.
now.
Alright. Okay. Thank you, Ms. Joanne. Now, we will go to the sustainable finance of the Bank of the Philippine Islands. Perhaps before we provide context on the bank's green products and solutions and social products, right? We will first provide you context on our SDG portfolio, right? So as a financial institution, we as a bank recognizes its important role in directing funds towards the country's sustainable development. So as such, BPI remains steadfast in financing companies and projects in support of UN Sustainable Development Goals. So we are happy to share that as of full year 2025, BPI's outstanding corporate and SME portfolio in support of the UN SDG grew from 958 billion in 2024 to 1 trillion, representing 51% of total SME and corporate portfolio. So, in fact, the bank has successfully achieved its 1 trillion target 1 year ahead of our commitment. So it really shows our drive in both the green and social portfolio, right? Driving the increase in our SDG related assets. So jumping straight now to BPI's green offering. So as Ms. Joanne mentioned earlier, we have various green products and solutions offered to corporates, SMEs, and retail clients. So for corporates and SMEs, we have the Sustainable Development Finance Program, the first of its kind in the country. It's a multi-awarded initiative that has financed a cumulative of 532 sustainable projects. It's an unprecedented number in the Philippine banking industry, with a total disbursed amount of 376 billion since 2008 and an estimated reduction of GHG amounting to of 41.18 million tons of carbon dioxide equivalent per year. So through the SDF program, BPI goes beyond financing projects by empowering our client in mitigating environment degradation by reducing their in-house greenhouse gas emissions and by reducing risk through climate proofing their businesses. So you'll see here that for the SDF, it's actually the first and only in the Philippines to provide free technical assistance to our clients from accredited and trained IFC consultants. Right? So we also have green offerings that we provide to our retail clients. So in fact, BPI is the first bank in the country to offer financing options for eco-friendly housing and auto choices through our green solutions, which strengthen our commitment to sustainable finance. So we have products here such as solar mortgage, electric vehicle financing, and hybrid vehicle financing. In fact, we also have we also offer to our clients an option if they want to install a EV charging station, right? Um, we also have FlexiPay for solar, so solar mortgage. So this is a collateral-free financing solution for solar via BPI credit cards. So this is actually a 0% interest on installments for solar on the roof for accredited solar panel merchants of the bank. So now, from green offerings, BPI also offers a slew of social products. Turning over the floor now to Nats Barreto.
Good morning, everyone. Just checking if I'm audible.
A bit low, Nats.
A bit low. Hold on.
We can't hear you, Nats.
Sorry, is this better? Better.
Clear.
Better.
Yeah, we can hear it now.
Good morning, everyone. I know much of the discussion this morning has been on the environmental aspect of ESG or on the climate angle, but hope we can take a few minutes to discuss BPI social initiatives for financial inclusion. BPI has always been a bank for uplifting Filipinos' lives, creating positive social impact. Since even the 1980s, we actually have records of BPI supporting small and medium enterprises as early as the 1980s, and we actually have been supporting the agricultural sector through BPI Agribank. Next slide, please. Yeah, so thematically, we're going to divide the discussion on financial inclusion into four in terms of lending, insurance, banking facilities, and of course, capacity building on financial literacy. Right, next slide, please. So on the lending side, BPI has been providing financial services to different segments, underbanked and underserved segments, including small and medium enterprises. We have a dedicated business banking group. And in 2025, as of year end 2025, we have served over 110,000 SMEs with an outstanding book of 64 billion pesos. We actually offer different targeted services for them, including both secured and unsecured lending and even a property loan. For micro entrepreneurs, we have a dedicated subsidiary, BPI Banco, who has served over 1.4 million self-employed micro entrepreneurs with an outstanding loan book of 17 billion pesos. Actually, BPI Banco has many services, targeted services for micro entrepreneurs. So they have the flagship product, Negosyo Ko, and then they can loan up to 500,000 pesos. BPI Banco actually also supports the agricultural sector, small-scale farmers. We weren't able to share it here, but we actually have a product called Agri Negosyo Ko. We were able to serve small-scale farmers of servicing our corporate clients. So the onion farmers of Jollibee, the corn farmers of Bayer, the coffee farmers of Nestle, we were actually able to serve them through BPI Agrinegosyo ko. Sorry, I think nawala from my end yung slide.
Let me just
Well, you
share.
can be reshare. Yeah, thank you.
Yeah, while Joji is resharing, siguro I'll continue sharing, no? Aside from BPI Banco, we also have BPI Legazpi Savings Bank. We have a dedicated segment servicing public school teachers. So, wala pa rin. I think we have, as of year end 2025, we have served over 69,000 public school teachers with an outstanding book of 15.5 billion pesos. On the institutional loan side, we have education-related loans, health-related institutional loans, and then on agribusiness, we actually have a dedicated agribusiness team servicing larger corporate clients on the agriculture and agrarian sector. So as of year end 2025, we have around 192 billion peso loan book on agribusiness. And of course, on the retail side, we also have the motorcycle loan book serving over 41,000 Filipinos, 5.5 billion peso outstanding book. Actually, for the motorcycle loan book, a lot of these are first-time bankers. A lot of the borrowers for the motorcycle loan book. So it's really a gateway to banking. Next slide, please. On the insurance fronts, we have an array of both non-life and life insurance products targeted for the underbanked and underserved sectors through our subsidiaries and affiliates, BPIMS and BPI-AIA, to cover the low-cost solutions, insurance solutions under BPIMS. Next slide, please. So we have BPI freelancers specific for self-employed individuals, freelancers, consultants, and digital nomads. We have BPI Kayak Care. This is specific for individuals diagnosed with cancer, heart attack, and stroke. And then we have a low-cost personal accident insurance called PA365 for only 365 pesos a year or 1 peso per day. That's how cheap it is. It's just 1 peso per day. You can have your personal accident insurance. We also have an insurance product for commuters and motorcycle riders. It's BPI Safe Sakay. So sa mga mahilig mag-angkas, mahilig mag-joyride or move it, you can avail BPI Safe Sakay. And then BPI Secure Assist, this is a collaboration with BPI Banco. So it's bundled with BPI Banco products. It's fire and calamity insurance that's also extended to our self-employed micro-entrepreneur clients. On the next slide, we will feature our BPI AIA insurance products. So we have InstaProtect and Pamilya Protect, which are both low-cost life insurance products. InstaProtect is for individuals, while Pamilya Protect, it's for families, for Filipino families. So next slide, please. So all in all, these are our insurance products for financial inclusion because even the underserved, the underbanked, they need protection. They need financial protection against life's unexpected events. Next slide, please. So we also have different banking facilities to make sure that BPI services are more accessible and affordable. So we actually have agency banking. Agency banking, what we did here is we partnered with different stores nationwide, so such as gasoline stations, Sea Oil, Robinson's Retail, so Robinson's Supermarket, Uncle John's, Prince Retail Stores. In Tuguegarao, we have I forgot the name, but there's a popular chain in
Rodamel.
Rodamel, yeah, thank you, Ms. Joanne. Rodamel is a popular convenience store chain in Tuguegarao. We actually partnered with them, and what we did, we offered different BPI banking services to these partner stores nationwide to multiply BPI's presence. Kasi not everyone may have access to a nearby BPI branch. Not everyone may have access to a digital platform. So kahit wala yun, they can still access BPI's banking services in some of these partner stores. They can even do withdrawals and deposits. And in 2025, over 500, we were able to sell, or different clients were able to avail over 500,000 products, different BPI products and services through our partner stores. So imagine kahit sa mga islands like Bantayan, which is 4 hours away from the Cebu city center, where BPI has presence. You can do banking. BPI BizLink. So this is a digital platform specific for SMEs. So later on, there will be a discussion on BPI's digital platforms as well. Banco mobile app specific for self-employed micro entrepreneurs. Kasi digital platforms, what they do is they make banking closer to everyone. So kahit senior citizens or PWDs or people far from city centers can access banking services. And finally, we have BPI Remit, which is a product introduced last year in 2025. It's for the instant sending of money from the US to the Philippines via the BPI app. So OFWs can now easily, instantly send money to the Philippines, to their loved ones here in the Philippines. Next slide, please. Okay. And of course, capacity building. BPI is very much into capacity building on financial literacy because it's a key component, right? For financial inclusion, for financial independence, right? So for SMEs, we have different biz talks, Kanego Talk and Kanego Sosyo. So our business banking arm servicing SMEs have all of these capacity building all over the country, right? So they actually also have materials online that you can view. BPI Banco, they have Banco on the Go, which are caravans at wet markets, or in Tagalog, palengke. So they go to different wet markets, bringing banking closer to micro entrepreneurs. And then we also have a lot of financial literacy and fraud awareness sessions targeting different audiences. So academic institutions, corporate partners, and local communities. Actually, this is just the tip of the iceberg. We have a lot more financial capacity building initiatives for underserved sectors. In a few days, we'll actually have one specific for seafarers. So if you want to partner with BPI for financial literacy trainings, then reach out to us. Next slide, please. Yeah, so of course, we have fundraising for financial inclusion, the COVID Action Response bonds during the pandemic, and the recently issued BPI Siglak bonds. So proceeds of these bonds are they go to projects, to SMEs, micro entrepreneurs with driving positive social impact. Next slide, please. Yeah, so all of these initiatives actually help us in our financial inclusion commitment. We actually released this or updated this commitment recently. So it's now we now have a threshold of serving 20 million underbanked and underserved Filipinos by the year 2030. This target used to be lower. This target actually came from 5 million, but we realized we already crossed that threshold long ago. So we had to revisit our target and set bolder targets to provide financial services for underbanked and underserved Filipinos. So that's for the social component. The next part of our presentation is on BPI's responsible operations. Just allow me to provide an intro on back to the environmental component of ESG on decarbonization. Next slide, please. Yeah. So in 2025, we actually also I think we're the first bank to establish Scope 1 and 2 decarbonization target. So we released a 70% target by 2050 and a short or a near-term target of 50% by 2030. Um, this roadmap, by the way, was actually assured. It was externally assured by DNV, a third-party assurance provider. We focused first on scope 1 and 2 because we wanted to start with what we can control, right? What we can control, what we can directly influence. But nevertheless, we're actually still studying pathways on how we can extend this to financed emissions. As you know, financed emissions form the largest bulk of emissions attributable to a financial institution. So these are the different decarbonization intervention plans that form part of our Scope 1 and 2 decarbonization roadmap. So this is a bit technical. The jargon in the first column is a bit technical. So I'm just gonna focus on the intervention plans. So we're gonna be replacing our old generator sets. We're gonna be shifting to hybrid vehicles for the company-owned vehicles. We're gonna be shifting to air conditioning units and refrigerators with low global warming potential. Although for this one, we have been doing it already. Actually, a lot of our air cons and refs are already energy efficient using refrigerants with a low global warming potential. And then, ito rin, the last row, we've been doing this actually, shifting facilities to 100% renewable energy use, shifting to energy efficient technologies, and the IFC Edge Green Building certification of BPI branches. I think this will be discussed in more detail later. And I think for my portion, that's it. Thank you very much, everyone. Have a great day. Turning it back to George.
Thank you, Nat. Okay, so right, so as a bank, right, we also walk the talk. So the principles we espouse to our clients and stakeholders, we also abide by them as well. And we have concrete examples. For example, the first one here, we use renewable energy in 100 of our branches, bank branches, and 4 of our corporate offices. Year to date, we also have 57 of our branches that are IFC Edge certified, and we have 17 of our branches having EV charging stations. So we also have an electric shuttle for employees and service providers that we provide for free in our central business district. You can also see here, right hand side, that both our debit cards and credit cards use eco-friendly recycled materials. So using PVC-free plastic. So if you noticed, if your new debit card right now uses the horizontal red credit debit card, that's already using a PVC-free plastic. So at the same time, as part of our responsible operations, we also use sustainable aviation fuel or SAF for document shipping, right? And of course, we use energy efficient technologies as mentioned earlier. Uh, for example, through our energy efficient appliances such as the air cons and refs, having for us to have a low global warming potential. In addition to these sustainability related initiatives in our operations, we also have the digital platforms. So the bank's digitalization efforts help augment sustainability efforts on two fronts. First is the efficient delivery of infrastructure via digitalized and paperless initiatives, drastically reducing the carbon footprint and travel time in accessing banking services. We also widened the reach, allowing the underbanked and the underserved to access affordable banking services, even in locations far away from city centers. So it's really, the approach here is really both for environmental and social, right? So as you can see on screen, BPI has 7 primary digital platforms catering to various segments. So, namely the BPI, which is our digital wallet, BPI mobile app for retail clients, BPI Trade for equities trading, Banco mobile app for microfinance, BizGo for MSME clients, BizLink for corporate clients, and BPI Wealth for affluent clients. All right. So now, capping off at least for the responsible banking and responsible operations are the sustainability policies and standards of the bank. So, these policies and standards support the banking and operations of the bank, of BPI, right? So, recall it was earlier mentioned in Sir Arvi's presentation, the issuance of a bond, of an ESG themed bond, which requires a sustainable funding framework. So BPI also has a sustainable funding framework which guides the issuance of ESG themed bonds that funds projects with environmental and social benefits. So in this case, our framework adheres to a strict eligibility criteria aligned with global and local standards. So BPI Sustainable Funding Framework considers these 23 eligible projects that can be used for the bank's ESG themed bond issuance. So you may recall previously nabanggit yung Sigla bonds, right? Sinag bonds. So those bonds issuances or bond issuances use this framework, no, the Sustainable Funding Framework of BPI. And other than the sustainable funding framework, we also have policies in place institutionalizing the identification, monitoring, and management of sustainability risks. So we have this responsible lending policy integrating ENS criteria as part of our credit risk management. And we also have an ENS or environment and social exclusion list and environmental risk assessment and a screening standard for protected areas. This is very relevant, especially the environmental risk assessment, given the recent earthquake, right, in Mindanao. So, in fact, you may access your own hazard scores, no, via the Hazard Hunter PH, which is free, by the way, no, provided by the OSTP Vox to everyone. No? You'll see there your hazard score, whether you're exposed to earthquake, liquefaction, or even flooding. So now, giving the floor back to Ms. Joanne Ayala. Joanne?
Hey, thank you. Thank you, Georgie. So just to we will share with you the sustainability formula that we follow in BPI. So you may have heard this. Hopefully you have. What we say is that it is not sufficient that you pursue environmental and social and governance initiatives independently. There has to be an E2. And economic benefit means, kindly show, Georgie, the next slide, broken down. That means economic benefits. This is from the perspective of a bank. No, from your perspective as non-banks, so for those who are not from the banking sector here, to us, increase in revenues is increase in interest and in non-interest income. To you, it's simply increase in your revenues as a whole, perhaps due to higher sales out of selling more sustainability related products. So that's one, boosting revenues. The second economic benefit can be derived out of reducing costs, perhaps because of the use of technology or improving efficiency in general. So whenever you shift to more high-tech machines, so we call them high-efficiency motors, HEMS, you reduce electricity consumption, and there goes your reduction in cost. We want that. We want that economic benefit, the cost reduction to be a deliberate objective of your ESG initiative. And then lastly, reduction in risk. So we are in the Philippines, typhoon belt, earthquake zone. volcanic zone. So, because it's along the Pacific Ring of Fire. So, risk mitigation initiatives, including compliance initiatives to prevent penalties, these have economic impact, no, to the institution initiating the ESG initiative. So, what we're saying is we do not need to be ashamed of pursuing profitability or improving the bottom line or improving the capability of an ESG initiative to sustain itself because it can fund itself and it is not dependent on donations. So self-sustaining projects are truly sustainable because of this economic benefit. And then lastly, what we hope to emphasize, going back to the main formula, you will notice that S is bigger than E, F, and G. No, so as emphasized earlier, no, while actually we're happy that we are considered leaders in green finance. No, but if you peel the onion at the core of BPI, really, the strength is in social lending. Now, so the many banking solutions enumerated earlier, wrapped by platforms, so digital platforms and phygital platforms, meaning not only mobile or internet-based banking, but inclusive of physical presence of people, no, who could assist the underbanked and the underserved. These are solutions, no, that are aimed at reaching those whose needs, no, are not met by the banks. We call them underbanked and underserved segments. So S bigger than E and G plus E2. And this is the formula we hope to leave you with as we close our presentation today. Thank you.
Thank you, Ms. Joanne, and thank you to your team as well for helping you present the different solutions, products, and services that BPI has to offer. And we're very proud as well that we are one of your partner in this journey because as you're part of the network of BSD, and BPI has been a long-term member and of course partner as well in some of our projects and programs. So thank you very much to your team. So now it made it more clear. I think we can go back to our program deck. Yeah, okay, there. I think it's now clear to our participants how we can be partners, right, in this ecosystem. So we are now opening the floor to any questions and even comments to from our participants. No, this is very much really open to the first timers there, knowing all about this. No, if you have like clarifications to a specific solution or services, please write your questions in the chat box. But I do want to kick off the discussion and just share that by the way, this recording or this webinar is going to be shared in our social media platforms. It's going to be up for public viewing after this webinar this morning. So you can really share this with your colleagues. For those who have who arrived late and for those who wanted to join and they were not able to attend. So just to kick off, Ms. Joanne and to your team, I do have a very personal question. So if I were an individual and I would like to invest in sustainability, I am employed and I'm starting a new family. I do not have a house yet, and I'm planning to get into a vehicle to plan my first purchase of vehicle. So how would you suggest I start with, or how I start with, and how much would be the investment for an individual like me?
Let me start with an encouragement that you shift not from ICE, no, to internal combustion engine to electric or hybrid at the very least. So think of around 30 to 50% savings when you go hybrid, and then well, even higher if you go full electric. But they have their own strengths and weaknesses. The weakness of an EV today, and I have one, no, the weakness which is already being addressed in a big way because of the surge in demand. Now is the availability of charging stations. So those basic considerations first. What do I do, EV or hybrid? And I wouldn't be surprised if you still go for hybrid in the meantime, if your planned distances are more than say 200 kilometers one way. Okay, why? Because the turnaround is something like close to 500, inclusive of traffic. So you have to have that kind of buffer. Now, there are several cuts no on the tenor. Could be a few years, could be 5 years, could be a little bit longer. They have lengthened the tenor for electric vehicles in particular. And then I just don't have the exact interest rate for now, but what we were told was when Green Solutions was offered, inclusive of EV and hybrid financing. First, interest rates were made even more competitive, and then entry. I cannot quote the exact minimum salary required. I'm not sure if it's still 24,000, but thereabouts. So there's a minimum salary required, and there's a take home, no, net of all your other existing loans. There is a very important lesson there when it comes to financial well-being, no. We would advise you not to overborrow, to plan your amortization, and to make sure that, well, in the first place, no, you've made the right choice already as to what kind of vehicle you're choosing. Given the price of fuel now, there has been a surge in uh, demand, no, for electric vehicles and hybrid vehicles. BYD ran out of supply, I understand. So pretty good problem. But I think what will have to come next and immediately, is the availability of the charging stations, as mentioned earlier. Thankfully, we already have a couple of BPI branches having the charging stations. Not all of them are fully operational yet. No, they're ready, but the permits of the LGUs is what's keeping them from being all 17 being ready for use. No? But they are ready. They are already. Yeah, it's just a matter of plugging them in. At least 3 are fully operational. Sorry, there are 7 operational, and that's what's the latest number? Is it 10 already? Would we know? But not all the 17 are already covered with permits. So there. In summary, Reco Go EV. If you are going to travel very far, one way is around 200 for your trips. Then you go hybrid. Don't go ICE anymore. Eventually, you'll regret it. In Singapore, there'll be zero ICE by 2030. I just don't know when the Philippines will be, but you feel better. Eh? That is your own tiny contribution, right? And then when you talk about it, these, as I was saying earlier, no, the conversations about what you do also help. That's why I got an EV way earlier, no, and it is a statement. Admittedly, it is more an advocacy than a true need, no, because I live very close. But yes, it does make a statement, right? If you have an EV or a hybrid. Okay.
Thank you. Okay. Meron pong follow-up question si Sir RV. Sir RV, do you like to read it or
No,
no?
I was just wondering whether Ayala's what's the name of your
AC
car company?
Mobility.
AC
AC
Mobility, are
Mobility.
they actively building charging stations, or is this
Yes, they are.
not their core business?
They are. They are partnering with so many groups. And the ask pa nga is for BPI to have a charging station loan.
Ah,
A loan to make it easier, to have your own at home. Uh, kasi it's much easier if, overnight, you can plug your car and you
oo
don't
nga.
use the fast charging. No, fast charging kasi could shorten the life of your battery. So you wanted the
Okay.
slow charging approach, no?
Mm,
Yun. So si
yeah.
Mr. Palafox is saying yes. Kasi technically, di ba, mas hirap eh. You burden the battery by using fast charging always.
Yeah.
But they are aggressively putting up. That's why well, of course, it is our initiative din naman to partner with them, no, to have charging stations within the branches of BPI. So ano na kami, Luzon, Visayas, Mindanao na yan. So we're expanding it even more. And I think it helped that sometimes when negative things happen, there is always a silver lining
Right, yes.
that the surge in fuel prices that boosted the shift in demand to EVs. Suddenly, BYD had zero inventory and the waiting time is a couple of months, no? So and to your question, that helps in boosting now the charging stations because the ecosystem justifies it na, and the whole ecosystem will need it, and then the profitability of having a charging station is also boosted. So biglang exponential growth yan.
Okay.
Okay. So do we have anyone would like to raise their hand?
There's a question from Dito.
Yeah, meron po tayo. Sige, so I'm gonna read it on behalf. Thank you for doing this VST, so enlightening, so inspiring. And to Miss Joanne, thank you for being the mother of Alex. If you were advising Dito's leadership team,
Not tita only, not mother,
kilala
tita.
pala yan. What is one bold sustainability commitment or initiative you would encourage us to pursue now that could create lasting impact for future generations?
If you ask me, it's S ahead of G. Sorry, S ahead of E, and ahead of G. No, so in fact, what I would always say is this, no, environmental has become the more visible advocacy globally. When you think of urgency, etc., it's like if you don't stop global warming, at the trajectory we're going, more than 3%, we're going to reach a point of no return, etc. But if you think about it, at the end of the day, for what is the environmental initiative and for what is the governance initiative, no? Even risk mitigating measures, because we didn't tackle cybersecurity, but that is among our biggest advocacies as well, and we invest enormous amounts of money there. But at the end of the day, both the environmental and the governance, no, risk mitigation, cybersecurity, etc., initiatives all blend towards one central goal, and that is improving human lives, no? Uplifting human lives. So if you ask me, biggest story, biggest ask, or biggest advocacy that you can adopt today is that as you pursue sustainability, your sustainability commitment, your advocacies, think of the core objective at the end of the day. Where is the central point? Where's the soul of everything you do? It should be at the end people, no? Improving people's lives, protecting people. So, yeah. Okay.
Very well said. Okay, thank you po. Any pahabol questions? And I do have another follow-up question to my question earlier, but sige, do we have more? Okay. Okay, I think I'll go with like this quick question. So on the similar situation po, if I were a business owner naman or a startup organization without extensive resources, what would you suggest as a practical first step a business owner can take or integrate, sustainability into their operations?
A business owner's goal is to make money, right? When you make money, there are only two ways to make money. You boost your revenues or you reduce costs. Yun yung first, no? Siyempre, risk reduction comes in, but it becomes a secondary priority, diba? The main priority is you make money, bottom line, increase your bottom line by boosting income and reducing costs. Boosting income could come in the form of more sustainability related products, which have become more attractive, especially to the younger generation. Meaning, all things being equal, one says sustainability produced, the other one is just a regular product, there's a tendency, much longer tendency now, doon na lang ako sa sustainable, di ba? A healthier product versus a not so healthy product, and then sustainably produced product versus a regularly produced product. Now, but if you ask me what comes first, kasi yun, medyo matagal yun, product development. If you're running your business now, that means you already have your product, di ba? So you just have to change the way it's produced, but that will take a while. What's immediate? Simply change your air cons, change your lights if you haven't done so. Air cons save as much, inverter air cons save as much as 50%. Lights, if you're using the incandescent light, think about it, just simple math. 150-watt incandescent light versus 16-watt LED light. Do the
Yeah.
math, right? So the savings in money for energy efficiency initiatives. So, mouthful kasi, basta ano na lang, low electricity lights and low energy lights and air cons. Doon pa lang, tapos ang laki na kagad ng savings. So, an SME, you're already in business, you already have your products, no? First lineup, reduce your electricity consumption. Comes in water after, but at the end of the day, no, bottom line is what we're talking about, no? And by the way, on the side, don't be ashamed to talk about improving profitability while pursuing sustainability. They have to go hand in hand. I get questioned, I get attacked by saying profitability is important, but really that formula we shared with you, that is among the best things I will leave BPI with. That's among the best things I can share with the rest of the attendees here.
Yeah.
Agree.
Okay.
Oh, thank you. Okay, Sir RV, kayo po, meron po kayong ano? Do you have last
Medyo
question?
big picture, pero I was just curious what taxonomy you used when you were building you were creating your green bond framework. Kasi maaga kayo, di ba?
2019.
So, what taxonomy
kami.
did you use for? And you were also selling it to the EU. So I was just curious ano yung taxonomy that you use for the green bond framework.
Nats, wala pa bang ICMA nun? But we,
Okay.
kasi 2019 kami, no? But we, today, we are definitely compliant to ICMA, LMA, well, also the SEC has its own guidelines, no?
Yeah.
But we offered, when we offered in 2019, kasi as early as 2008, we have been guided by IFCs. Performance
Okay.
standards.
Yeah.
So, and remember, we have IFC technical consultants, no? So our IFC consultants span RE, EE, green buildings. So, Mr. Palafox, our representative from Palafox here, how do we call you? Kasi may habang name niya, Herman.
Jepo.
Hi, ma'am. You can
Okay.
call me Jepo.
Yeah.
Jepo. Yeah. So Jepo, we do have Engineer Mon Aguilos, no? So for our green building advisory, we have for RE Engineer Navarro, no? Silver Navarro, and Engineer for EE Ray Marquez. So and then we have in Villanueva, no, for blue finance and pollution control. So we have already 4. Lately lang pumasok si female, no, for sustainable for blue and pollution control. The other 3 they've been with us since 2008, yung energy tsaka si Mon Aguilas 2013, 14. So talagang ano yan, therefore, taxonomies of IFC, because they're IFC trained and accredited, the taxonomies upheld by IFC, which are embedded in their performance standards. So that's what we've been upholding. But our sustainable funding framework, you would see it in our website. It states there compliance to or alignment with ICMA and LMA. Tapos
Mm.
ano rin, climate bond principles din,
Okay.
CBI. Okay.
Yeah. Maybe just for the non-banks or the two banks that are here. Well, before you can offer yung mga green bonds, you need to have a green bond framework kasi, and that's usually you have to choose what taxonomy or classification you have to adopt depending on your market and your plans. Sige, thank you.
Ginawa namin all of the above eh.
Hirap.
Naloka kami.
Yeah,
And
okay.
and then we had ourselves audited. By the way, that's another thing, no? External audit is also needed.
Yeah. Then, quick question pala, kung walang ibang tanong. I was wondering what is the resale or collateral value of an EV car versus a ICE? Kasi when I talk to people, some of the parang mga car buffs, they say, wala namang resale value yan. Then, gumagano'n sila.
Yeah. You know what? It's not to my mind, hindi pa rin siya masyadong clear, no? There are yes, there is a team in BPI who does it, and I'm not sure if it's less compared to ICE. But I think it's moving. Why?
Yeah.
Because the realization of the value of an EV car moved significantly since February 28 because of the
The
fuel
war, yeah.
because of the surge in fuel prices. I think my answer will be it will be catching up, no? It will be catching up with ICE. Usually ganun the newer technologies, they don't have very stable valuations at the onset because the secondary market is not very well established yet.
Hindi pa, yeah.
So now, with the demand, ang joke ko nga pag binenta ko yung EV ko ngayon, baka mas mahal pa doon sa purchase price ko. No, kasi ang walang makuha eh. The demand
Yung
has overtaken supply.
Yeah.
I think Jepo has an answer. Go ahead, Jepo.
Yeah, so just to chime in. So actually, thanks to BPI, I'm also driving now BYD's Lion 5. Meron
Wow.
kayo
Yeah.
nung I think yung 0%.
Yes.
Oh,
Ang
Yeah.
wow.
galing.
0%.
You got
Galing.
But
it.
yeah, and as for to answer sir the resale value, yeah, Ma'am Joanne has a point. It's almost close to selling price, just mainly because I think there's even a line to be able to purchase one now. I think there's too much demand compared to the available supply. So even for me, for example, my experience was it was just based on what they have on hand. Otherwise, they told me I'd have to wait at least mga 1 month, 2 months if I had a special configuration, color, etc.
Wow.
But just to add to that, the discussion earlier, ma'am, about the EV charger. Yeah, I think there's going to be a larger demand coming forward. I think it's called the the law that requires
Yeah.
buildings to have 5% parking slots as EV charging capable. So, as much as possible now, we do design all the buildings that we have to be at least retrofittable. Because of course, right now the biggest problem is that all the designs that we have, we place all of these solutions, but then it's always the cost. That's always the biggest hurdle. Architect, di ko afford. Architect, masyadong mahal. Wag muna now. Especially surprising considering around 50%, I would say, of the buildings that we do are government buildings. There's very much a need for it to be cost effective, especially when you're talking to an LGU or maybe even a mayor who only has 3 years or 2 years left on their term. And implementation of this building might take 4 years, 5 years, something like that. But through very much tying it to Sir RV's presentation earlier about policy becoming very extremely important. I think that's where we can see a funneling from the policy influencing um, market behavior, purchasing more EVs, and then now us designers are definitely feeling the uptick, and that Now, we even design roofs now to be very much solar capable. We have clients now asking us, architect, the roof, should we design it to be facing east, south, west? We have clients who are master planning large scale communities, asking how reasonable it is for me to use my remaining hectares to be a solar farm, something like that. And then they're always asking us, where do I start? So that was actually my answer earlier in the questions, the survey earlier, because that's very much an everyday encounter for me. Architect, we want this project to be more sustainable. Where do I start? And my answer sometimes to that is, well, what can you afford? And then very much we can plan based on that. So yeah, very enlightening discussion, ma'am. Thank you so much.
There's a comment.
Yeah, so we have a comment here. As someone interested in making some sustainable choices at home, who at BPI can we speak with to learn more about financing options for residential solar power systems for small farms and electric vehicles?
We have a program called Green Solutions. This is the retail program, no, because of course, we have one for corporates, no, for business enterprises. This one is for homes, no, for your own, even a small farm. Now, when it becomes a business, ibang group na yan, no? So in BPI, we're segmentized. If you're talking of your home and your own electric vehicle, you go to the Green Solutions team of BPI. The main group there, the main office is in Paseo Corner de la Rosa. So but we can look for people for you, no? We'll ask kasi if we give you the names, the name of the big head, hindi naman pwedeng siya, no? We'll give you a couple of maybe through BSD, we can give you a couple of names. Tell us where you're located, no? Because we are also geographically assigned. No, kasi maybe all the way in Pampanga, and there's a Pampanga team, you know, who can attend to you versus those of you who are in Bicol. The other one is if you are an SME, so we also have an SME team, no, who would assist you. And for mid-sized projects, if you are already crossing to the 10 million mark, no, in terms of size of the project, the free technical consultants come in, no, consultations come in, subsidized by BPI yan, no? So it checks the design, no, of the project. Now, what we're doing now is this. Even if, yes, you're welcome. Now, kasi we have solar on the roof. Na, so very tiny credit card loans, solar on the roof. What we've done is this, no? Because we cannot go to each and every home. No? Yun, medyo mahal na yun, di ba? If we bring a technical consultant to each and every home. So what we did was we accredited for solar providers whose capabilities we are already sure, no, could ensure that we are already assured of their capability to put up solar on the roof that will work, or solar on the roof which will meet their promise. Kasi minsan, okay, what has been happening is that certain solar technology providers claim they can do it. They can produce X amount of electricity, and then at the end of the day, they're not really capable. Ang dami. You have over 100, no, solar technology providers, no, installers. So what we did was we have already started with 4, accrediting 4 providers whose capabilities we have already vetted. So yun. So if you want, you can do that, no? Credit card, 0 interest rate. Take advantage, really, no? That's how committed BPI is. No, but you think of how how much we've been foregoing of potential income here. 0 interest rate, no, credit card funded, solar on the roof, right? Even for cars, no. So, Jepo, congratulations, you were able to get your your electric vehicle, no, at 0. That is not easy to sustain. No, so while it's there, please do take advantage. Okay, medyo mahal din kasi, no? So, commitment na lang yan ng BPI.
Maybe we
Through
can
BSD.
forward.
Yeah.
Yeah, we can just let us know, Miss Joanne,
Yeah.
sino yung mga point person, and then we can, of
Yes.
course, include it in our post email for the
Ah,
participant. Yeah. Okay.
okay.
All right. So I think we can end and we can wrap up our open forum. It's a very touchy a subject, but of course we would love to learn more about it. But maybe that's a good segue for us to have another webinar and probably more participants. We're gonna open it to everyone talaga. But for now, we want to thank everyone here who have stayed and of course who joined us. Of course, to the PPI team, to the Follow Fox Associates and group team. Thank you very much. And our key takeaway will basically really focus on, I guess, we can really work hand in hand. No, it's not just the financial institutions. It has to both work, with different organizations and different industries as well. So if you're really looking at, as you mentioned, nga po, yung solar panels, no, so you do have to really vet your supplier as well, kasi it also will reflect once you support them and sila din yung part ng system ninyo in terms of like providing solar panels. They also should have a very good system, right? And it really works, no? The operations are well vetted talaga. So again, thank you everyone. Please answer the QR code. Ayan po. Yeah.
Before we end,
Go ahead.
sorry, let me just mention what we are doing today. This is part of the Sustainability Awareness Month celebration. So thank you for taking part in it, for to the attendees, and thank you BSD, no, for this specific forum. Very, very impressive, actually. I'm surprised to hear about sustainable living, no, in from this angle. Thank you so much.
Thank
Thank you
you.
po. Thank you, Ms. Joanne.
you.
Sir RV. So the
Okay.
rest, yes po. Sir RV, baka you have a last few
Well,
sentiments.
I'd like to thank BPI nga, Ms. Joanne Ayala for participating in this webinar. I think it was quite informative. And again, as a reminder, we all should be aware of our positive climate shadow, not only as an individual, but as what Ms. Joanne earlier mentioned, that there could also be a corporate climate shadow, which I think BPI and the Ayala Group are already doing. So again, thank you. And as mentioned by Ray, this is recorded and we will be sharing this with other groups. Actually, I've already indicated that we might share it with the Bankers Association of the Philippines, if that's okay. So
Yes, sure,
yeah.
sure.
Thank you. Thank you again.
Thank
And
you.
hoping for Alex Iala to win later. Later
Thank
or
you.
tomorrow.
Thank you.
Sige, thank you.
Thank you,
Bye.
everyone. Have a
Bye.
nice day ahead.